Okay, so this is the fourth session on fiscal policy and budgetary framework and its taxation. And there's not a huge amount on this. I could have finished it in the last session, but as is typical with me, I went on too long. So yeah, we'll try and get this done. So this is just a continuation of taxation. Adam Smith's canons said taxation, principles of taxation. And what we're going to look at is we're going to start off with saying, so why does the government tax, and then what interventions can the government do to ensure that their economic objectives are met? Now, again, what's really important to remember here is the type of economic system we are in. We are in a mixed economic system, which means that the government intervenes where necessary, and they may intervene for particular reasons. So, completely different than the free market. The whole concept of the free market is let the market decide. Let the market decide. Government should not really intervene at all. Centrally planned is the government intervenes all the time. The government, they're generally welfare systems, and the government intervenes all the time. Okay, I think we've spoken enough about that in the past. So, why does the government intervene in taxation in this country? Loads of reasons. So let's go through them. Number one is they may decide. Now, again, these are all decisions that a government makes, whether or not they want to intervene. They may decide to increase taxes to decrease consumption of a particular good. Okay, for a social good or an economic good. So socially, increase taxes to decrease consumption. Give me an example of that. Cigarettes. Too easy. Pack of cigarettes is now what, 15 euros? When I was your age, it was like 3 euros. They're just taxing it to the hilt to stop people smoking. So that would be a social good. They also have this thing called the sugar tax, which they brought in 3 or 4 years ago. Same thing. Discourage people consuming healthy food, so they increase the taxes on it. Okay. They can also impose a levy to discourage waste. So, for instance, our waste was separated, I'd say maybe 10, 12 years ago. Like, again, when I was your age, everything went in the bin. Everything went on a bloody bin. Everything went into the black bin. There was no green bins and brown bins and everything like that. So what they do is they impose a levy on bin companies to charge more for black bin waste to encourage people to recycle. Reduce, reuse, recycle. It was a massive campaign about 10 years ago, just to get 15 years ago maybe, to get people used to the idea of reducing and reusing and recycling for all sorts of environmental and social reasons. So very simple to do. They just find people and say you can. I'd say the same thing, for instance, with a diesel and petrol car. So there's a levy on diesel and petrol cars to discourage people using them, and then they've tax incentives on electric cars to encourage people to buy them for, again, environmental reasons. They can impose fines on antisocial behavior. So again, they can tax you if you're doing things you shouldn't be doing. Antisocial behavior, these things called ASBOSs, antisocial behavior orders. They can impose fines. They can impose fines for littering. You can call it a tax. You can call it a fine. Essentially, it's the same thing. It's going straight back into the government funds. Okay. One of the things the Irish government does do, and I think I've spoken about this before, and this is massive in this whole section, especially when we look at tax evasion and tax avoidance, is you can give a tax break or a tax amnesty to encourage companies to set up again in this country. So you might say to, like, a massive company, the Irish government might say to a massive company like Apple or Dell or eBay, you don't have to pay tax for 2 years if you come to Ireland and establish a base here. So it's a tax break. It's a holiday from paying tax. It's an incentive for companies to come here, hire people, to create profits here, which will ultimately benefit the Irish economy because of the high skilled labour that they bring in. But again, it's the same thing. It's just saying don't pay tax for a couple of years, and it's an Irish government proposal because of one of our biggest aims, or one of our main policies, as we spoke about in the last one, was encouraging multinational companies to set up in Ireland. And they don't do it because we're all good-looking Irish people speaking English, and our amazing weather and everything. They do it for tax. Give financial aid to boost enterprise. Again, same sort of thing, boosting enterprises, financial aid to small and medium enterprises as well. I think I've spoken about this, like Enterprise Ireland, your local enterprise office will, again, they're government, not companies, they're government subsidiaries. They can provide tax breaks, tax incentives, financial aid, some of which you don't even have to pay to boost enterprise. Again, creation of jobs. And then the last thing They do. Again, this is with the taxation. Again, a lot of this is with the taxation that they're getting. So it's not as if there's a tax on infrastructure or a tax on financial aid. But when they get the money from tax, this is what they can do. They can create the infrastructure to help achieve the national aims. So again, one of the things the government wants to do is it wants to create these centres of excellence all around the country. So Ireland is very Dublin focused. It's very Dublin centric. A lot of you are going to move to Dublin for skilled jobs in the future, but it's not really sustainable. So what they want to do is they want to create these hubs all around, to create in the cities, the Galway hub and the Cork hub and the Limerick hub, and they want to distribute and decentralize operations from Dublin. And one of the ways they're doing that, for instance, is national broadband or the national motorway network. In particular, the National Rail Network, or having an airport in Shannon, an airport in Knock, an airport in Cork, an airport in Dublin, obviously, just again to decentralise the power. And again, that's part of the government aims, and they're doing that through the funds they get from taxation. Okay, let's keep going. 5 minutes in. So really, what you want to look at what the government want to do every budget is they want to say, should we save or should we spend? Should we save or should we spend with all this big taxation that we're getting? And really, they have a couple of choices. We have our normal current expenditure. Our normal current expenditure is on my wages and, doctors and nurses and wages and everything like that. But when the government gets a big windfall, and you'll hear about this in the budget a lot, they say, should we save it for a rainy day or should we use that money for big construction projects? Rainy day funds are great. It means you have money in the bank in case of a black swan event, which is happening right now. Or should you invest that money in a big construction project, such as the National Children's Hospital, such as the motorway network, such as the rural broadband rollout, because that will benefit the economy in the long run. I mean, it might cost you, 2 billion to roll out broadband to every part of the country. But if that translates into greater connectivity, greater business activity, and eventual greater jobs and greater tax being paid, it's worth doing it. So there's kind of a balance to be made between these two different things: rainy day funds and big construction projects. I need to speed up here. Okay, so that's all there. So taxation and economic sustainability. So really, what most governments have is you're either in a boom or a bust. You're either in a recession or you're plowing through with economic growth, with the economic boom. And really, what the government needs to be careful of, if there is an economic boom, is you don't want it to get too big too soon. The bubble just bursts. And this is what happens a lot with these booms: is the bubble bursts because house prices roar to shoot up to unsustainable levels. There's huge wage demands from the public sector unions, and the wages are sky high. And we call this when an economy overheats. If an economy overheats, it means that there's too much money, and everyone is just putting in huge demands for again extra wages and extra investments, and the government and the economy can overheat, and it can just collapse upon itself because it gets unsustainable. So a couple of things the government does, and governments all around the world do this: they try and slow down the economy. And one thing they can do, and again we have them here, is they can just tax people more. So in one ways, if you tax people less, people have more money in their pockets, people are more inclined to spend, people are have more confidence, and the economy booms. But really, you want to rein in that boom, because it can lead to inflation, and inflation can kill economies. So what they do is they can tax, they can increase the VAT and just slow people down. So you mightn't decide to buy that car if the VAT's gone up to 21 or from 21% to 23%, etc. You mightn't go on that holiday if the VAT has gone up again by the same thing. So you can kind of slow things down. The one thing they do is they pay off the national debt if they can. If you've loads of money in a rainy day fund, just start paying it off. During a boom, just start paying off your debts, okay? Increase the cash balances. NTMA, we're going to talk about later on. Don't want to really go into it too much. And then the one thing that they have done is during booms, you find a lot of banks just lose the run themselves and just give up money to everyone. Like back in 2005, 2006, it was great crack. Walk into a bank at 21 years old and they give you 300,000. So the banks kind of lost the run on themselves during booms because everyone has money. But really what the government should be doing is regulating the banks even more to just slow the cash spending down. Okay. The other side, of course, is economic recession. And economic recession is when your economy is not doing too well. So what could the government do? The government can either borrow or use state funds to invest in capital projects. We've talked about this a lot, capital projects. During a recession, one of the things that Keynesian economics would suggest is if the government spends to kickstart the economy. I think we've spoken about that hundreds of times before. During the Great Depression in the 1930s was the start of kind of the real construction of the US motorway the US highway system. So same thing. They could lower the tax rates, and again, this can be difficult to do because if you're in a recession, it means that people are struggling and the government aren't getting a lot of income due. But what they can do is just cut the tax, because if you cut the tax, you give more people money in their pocket, and you might then bring back confidence in the economy. Okay. Again, during a recession, you lower your corporation tax. Again, that's point 3 there, 12.5% lower corporation tax. And that was pretty much brought in the 1980s to just say we're absolutely in trouble here. Have the lowest tax rate for corporations in the European Union, and companies should flock here. And they did. Okay. Same thing with the last thing, tax breaks, for Indigenous Irish companies, again, etc. Same sort of stuff. Okay. Last thing I want to do is tax avoidance versus tax evasion. I have 4 minutes to cover this, so it should be fair enough. I actually looked at this. This isn't really on the course, but we're going to do it anyway. So you'll hear a lot about tax avoidance and tax evasion. I kind of brought it up at the start of this topic when we looked at Apple, for instance, not paying 13 billion in tax. The big difference between these two is one is illegal and one is completely legal. One is completely illegal and one is completely legal. And you can't, it's kind of in the name, like avoidance, you're avoiding something. Evading is generally a negative thing. So avoidance is you're trying everything you can not to pay tax. And tax evasion is when you intentionally go out not to pay tax. You're trying to cheat the government out of this. We all do this in some way, shape, or form. And most of what we do is we try and avoid tax. And if we can, we try and go to the experts, either the free experts like Citizens Information, which is really good. I'll show you that when we're back. You just go online and you say, how can I minimize my tax? And it can be something simple like getting an online account with the revenue system, which I have now. And you can, like, I can look for tax credits on like clothing. I can look for tax credits on work that I've done before I started teaching. So there's all these legal kind of ways in which I can reduce the amount of tax I have to pay. Not a huge amount. I'm not going to not stop paying 99% of my tax, but I can claw back money here, there, and everywhere. And most of this is there. It's part of the system. It's just using the system, using the information that's in the system, using the own tax system to just maximize the amount of income you can earn and minimize the amount of tax you have to pay. And tax avoidance, I mean, I've given so much advice to even colleagues in Endis about saying, well, why aren't you doing this? Just go onto that, press that button, fill out that form, send it in, you'll get loads of money. It's avoidance of tax. It's not illegal. Okay, it does cost a lot of people it does cost a lot of companies a lot of money. I mean, avoiding paying tax. And again, when companies do this, these are big multinational companies like the Apple of the world. They just hire these tax advisors and lawyers and solicitors who just advise them. You know what? You can move your money to Ireland. You can move your money to Luxembourg, and you can avoid paying tax. Like globally, they reckon about 600 billion of profits are not taxable because people just avoid paying tax. The United States, like that's 200 billion that the US is using every year on profits being moved offshore, and it's completely legal. Nothing illegal about this whatsoever. This is today. Look at the date there, 22nd of February, 2021. Like there's a multinational corporation company who doesn't employ anyone in this country, has no offices in this country, and yet in our GDP, they have 3.6 billion. But they didn't pay any tax. But yet they've done it completely legally. No employees, barely any revenues, tax-free profit of 3.6 billion through the Irish economy. That's including our GDP. I can talk about this later on, but like this is happening all the time. Okay. What do you do if you're rich as well? If you've loads of money, move to Monaco. Do you know what you don't pay in Monaco? You don't pay tax. So if you're rich enough, you win the Euro Millions in the morning, move to Monaco. You don't pay any tax. That's why when you go to Monaco, if some of you have gone to Monaco, like apartments in Monaco are millions to buy because it's just a tax haven. It's just full of rich playboy billionaires and millionaires. It's a horrible place, but it's interesting nonetheless. Tax evasion is a little bit different, and tax evasion is a little bit different. A tax evasion is me or you or someone you know refusing to pay tax or not paying tax because you know that you won't be caught. And this is the Herald. This is last year. Black economy on the rise. 14% get jobs done by Nexus. This is the most common thing. And the most common thing is if I need my house painted, I get someone here and I say, "Will you pay in cash?" I'll pay in cash. I don't want to pay the VAT. People do it. 14% of people getting jobs by Nexus. This is tradespeople doing a job for cash and not declaring their income. That's big. And then the last one is this thing called the Panama Papers. And unfortunately, I'm out of time because I have 4 seconds left. So I will talk about this when we get back. Okay, bye bye.